gathered in their masses, just like witches at black masses. Evil minds that plot destruction, sorcerer of death's construction. In the fields of bodies burning, as the war machine keeps turning. Death and hatred to mankind, poisoning their brainwashed minds. Oh Lord, yes. Politicians hide themselves away. They only started the war. Why should they go out to fight? They leave hell to the poor. Yeah. Time will tell them they have power minds, making war just for fun, treating people just like pawns in chess. Wait until that judgment day comes. Yeah. Now in darkness, world stops turning, as you hear the bodies burning. No more war pigs have the power, and as God has struck the hour, day of judgment, God is calling. On their knees, the war pigs crawling, begging mercies for their sins. Satan laughing spreads his wings. Oh Lord, yes.
Okay. We'll explain. We'll explain. How's everybody doing? Everybody likes cake, right? You jamming? How can you not like cake? Great production. Yeah, I'm working on emotes. Alright. That's it. Alright, what's up, guys? How we doing? Hope everybody's doing good. Alright. Y'all are in for a good one. I haven't been so excited to stream, to share a what if, to share a theory that I've been working on. It's like somebody said in chat, it made my entire day to hear this. But a guy in chat said, Jack doesn't shill coins, he shills ideas. And I really like that, because I guess without intending to be that way, that is how I am. I mean, that's like a really good summary. Hey, who told you to buy at 9K before the run? Who told you to buy at 10 and hold with conviction, no matter what? That was this guy. Okay, I'm not Bear Jack. Don't call me Bear Jack. I will interpret the data and come to a conclusion and then share that conclusion with the masses. Whatever the data says is where I'm going to come from. And that does mean there's going to be stuff I miss, and that's okay. But that doesn't mean I'm like 100% that way. Where are we right now? What does the data say? Because I'm not Bear Jack, I'm not Bull Jack, I'm nothing. I'm Data Jack, I'm Charts Jack, I'm TA Jack. That's what I am. Listen, guys, what I'm about to go over, this is why I've been kind of hyping this thing up all day today. There's something that I've come across. Look, okay, when I have tabs ready to go, All right, do you understand the seriousness, the gravity of what we're talking about? So I want you guys, whether you're bullish, whether you're bearish, I want you to set that aside. Look, take all that bias, put it in your backpack and set it off over here. Just for now, set your bias aside. Bull, bear, doesn't matter. Put it over here. I want to talk you through a scenario that literally no one's talking about. And maybe because it's going to be proven wrong, okay? Because rule number one, every good theory has an invalidation point. And I will cover that. It's not just a theory. It actually has ways to be easily invalidated. We had this Wyckoff, this quote, Wyckoff accumulation schematic we've been watching for months, right? The 60 days that it's been kind of going in here. And a lot of people have been drawing this Wyckoff schematic with like a spring and then like secondary spring retest and a breakout and consolidation and then full send. So that's been behind a lot of the sentiment is, hey, this is a accumulation for like a spring, like a Wyckoff spring. Just like in hindsight, we know, like if I flip this over to here, in hindsight, we know that this was Wyckoff distribution. That is not disputed in any way. Okay, if that is what it is. Full stop. If the target, one of the first targets was hit, there's a secondary target much lower. It's like 15 to 9 or something. I forget what it is, but it's like a calculated target. It's much lower. The question is, what has happened after? So a lot of arguments are, oh, well, we just had some consolidation in a wedge and it's breaking out. A lot of the alts look the same way. Other people will argue, oh, no, this was Wyckoff distribution followed by immediate accumulation, like with no break. So this has all been rattling around in my brain. And if you've been following me for any length of time, you also know that I've been having a really hard time with what's been happening lately. I've lost sleep over this. I feel like I've let people down. I feel like I've been a liability urging caution instead of like all in margin long bullishness. And I'm just being real with you guys. Like these are thoughts in my head. But in the back of my head too, I'm thinking, dude, I have built my stack from what it was to a stupid amount, like 6 digits in the percent gains. It's like 200,000, 300,000% or something from the time I started years ago, right? Not like overnight. I'm not trying to say I'm some overnight dude. That's the reality of like from when I started to where I'm in, I've done really well. How did I miss such a big move? What could have been behind that? I missed the majority of this move, 100%. I'm not going to act like I didn't. I did. And it's important to know that. What bothered me the most about this move was not the fact that it was up only and the price went up. I actually don't care about missing 50%, 60%. So when you miss 60% on a move, you can make up for that. It's not a big deal. What does bother me, or what has bothered me, is I did not understand the why. Why? In what world does Bitcoin go up 60% with no retests, with no breather? Literally the actual bull run itself didn't even do that. This impulse, both for Ethereum and Bitcoin, was like blow your hair back, hold on to your chair, than the actual bull run itself. I went back to the basics. And by doing so, it's always a good idea, no matter what it is you're working on. If you know you're good at anything, go back to the basics, try to find some fundamental understanding of what's going on, and try to build off of that. He said, look, you just need to change it up. You just need to have another angle. And I think I figured it out. I'm laying it out on the world. I'm telling everybody that it will either happen, it will either occur the way that I'm seeing it, or it won't. And it just is what it is. The last Wyckoff accumulation that we saw was not 60 days. It wasn't even a year. It was 467 days from the point it broke down, so within the trade range, into the sign of strength. All right, so I'm lumping these two things together. Where else have we seen this? Well, here's Ethereum. Ethereum has also gone through. If you were early in my stream, and I'm talking about back in July of 2020 when I very first started streaming, we actually identified this. Kudos to anybody who's been around. Bearjack actually told you how to get, what did Ethereum go to? 4,000, 5,000? I gave you a free 10x. All right, yay Bearjack. But the point I want to make, this was 818 days. Okay, over 2 years. Next up, we had identified Neo. Neo finished its accumulation also about 2 years, over 2 years, and it broke out at $16. It went on to 150 or something. So again, you got a 10x, you're welcome. And last, ADA, arguably the best performer of all, and the one I didn't build a bag on. Okay, so let me just throw that out there. This was the one Wyckoff accumulation that I did not build a bag because I thought naively that I would be smart enough and savvy enough to snowball it. So like, oh, I bet Ethereum blows up first. And then those gains roll into ADA, like something like that. And I would roll it one to the next to the next. That didn't happen, obviously. Okay, again, this was identified, same thing back in July. So we had 3 true Wyckoff accumulations for this cycle, not even for last cycle, for this cycle. And they all gave you 10x's or more. So you're welcome from Bear Jack. In comparison, we're being told that including the sign of strength, this recent accumulation was only 79 days. 79 days. You got to ask yourself, if 79 days is enough accumulation, if this provides enough of what's needed for the whales, why weren't all these only 79 days? Why wasn't Bitcoin 79 days? Like, in what world do we go from a year and a half to a couple months? Are the market dynamics that different? Are people just tripping over themselves to buy Bitcoin? These are reasonable questions, okay? These are fair questions to ask. I don't think that you can make that kind of leap. Hey, before this was 18 to 24 months or more. In Ethereum's case, it was 800 days. So what is that, like 26 months? But this time it's only 2 months and we're good. Send it. I had a really hard time mentally with this, okay? It was very, very hard. What I'm presenting to you is a theory, and it can be broken tomorrow. It can be broken at any time, and I'll explain the invalidations. But I'm building the floor. You need to understand this floor. The other side of it is distribution. We're all very familiar with distribution. 2017 into 2018. This distribution range lasted 40 days. The recent Ethereum distribution was 17 days. Neo, for example, was 33 days. These are the periods where they were in a set trade range at the highs before eventually cascading. We had Bitcoin in 2015 spent 467 days in its range, its accumulation range. And at the top, at the final top, it spent 40 days. It spent less than 10% of the time it spent accumulating. That is the case across the board. Ethereum spent 800 days and its top was 17 days. Neo spent 783 days and its top was 30 days. So we have variances between 5 and 10% within crypto of the top being 5 or 10% of the time spent in the bottom. Do you understand? It's like they're building rocket fuel. They're packing it in. They're coiling the spring and then they send it. And once it gets to its top, it can't last there forever. Everyone knows how parabolic tops look. They don't stay there that long. It's very reasonable to say, if there's a top you're looking for, at minimum, expect it to be less than 10% of the accumulation rate. This is a concept not often talked about. This is why I'm building the floor with this. Another example, so there's 2 kinds of distribution tops. There's different schematics, right? Here's schematic 1, here's schematic 2. Schematic 2 is what we saw in 2017, but schematic 1 is the one that we saw this cycle. It is literally what we saw this cycle. So schematic 1 had the late UTAD. It was the big breakup with the flag to the downside, eventually breaks down. Right here, same thing, the UTAD, the breakup above the trade range and the eventual breakdown. Okay, so this we know, this we see. And now I bring us to present because I was just memeing. I was just memeing with some folks on Twitter, but it actually hit. It actually hit that on a very low time frame, and I'm talking about on a time frame less than a week. Less than a week. We're looking at the potentiality of the same thing. We're looking at a smaller version, the smaller brother, the little brother of the big boy that we spent 90 days in. So I looked at this initially and I was like, nah, there's no way. There's no way. It's too low time frame. There's no way. It can't be. This is stupid. And then I got to thinking about it. And this is why I went and I mapped every accumulation range and their tops. If the time spent distributing is only 10% roughly, or less, some cases it was 5, so 5 to 10% of the time spent accumulating, then what would the math say that a 70-day accumulation range should end up being? 4 to 7 days. 4 to 7 days would be the project. Like if you knew nothing, you didn't even see today's price action, you went back in time and you did some kind of just rough math, you're like, hey, what would I look for? It would be 4 to 7 days. I put this out almost as a warning, like back when price was very first broke back into this trade range. And here's the deal. You can call it bullshit. You can say this is stupid. You can say, I'm never going to believe this. I'm never going to trade it. That's fine. Hey, if all I get you to do is lower the margin meter from 100x down to like 2x or 3x, and at least kind of take your foot off the up only bull gas pedal, I've done my job. That's what I'm supposed to do. All right. So here we are right now. What do we see? Floor, 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 break, consolidation. Break, consolidation. Here's the deal. Yeah, bear jack, ha ha ha, whatever, whatever. No, dude, I don't like put all that aside. There's no bias here. I have laid out the roadmap. I have justified my findings. And now I'll tell you the invalidation point. The invalidation point is just a new high. It's just a new high. Get us to 51,000, 50,800. Easy peasy. We just went on a tear. You're telling me Bitcoin can't get to 51,000? Get out of here. If this is, what other things might we see? If this was just a very quick impulse, a lack of on-chain metrics to back this up? Because if this was a quick impulse to get from A to B and to pump bags or to pump alts, then we would not see it on-chain metrics. All this activity took place on exchange, 100% on exchange. Now it may move off exchange and eventually be a part of what blows this up, but it answers so many damn questions. The biggest one for me being, why are the on-chain metrics for this period of time, this 130-day window, different from literally like the 10 years of history that we've gone through? Why is it different? Suddenly everything's changed? So all the issues we've had, why is Bitcoin going up when the Dixie's going up? Why is Bitcoin going up when all hedge assets across the entire world, gold, silver, copper, everything else, why is Bitcoin in a bubble going up while everything else is going down? Because if everything else is going down, then the whales and the hedge fund managers that want, quote, risk averse assets or like inflation hedge assets, they would all you would at least think they'd be flat. And Bitcoin would go, maybe it outperforms it for a little bit, no big deal. But for Bitcoin to go 70% while other things are dropping, add to the fact that on-chain metrics are not making sense to support a bull rally. It's very interesting. I implore you, at least consider the idea. There is no precedence ever for two distribution ranges in the exact same cycle. That has never happened. We have never had two Wyckoff distribution ranges, albeit at different time frames, at two different scales. We've never had two accumulation periods in the same cycle, and that's what we have. This is a first event. This is the first time we've seen anything like this. A lot of people bring up, what are my bullish rules that I set? They are my own rules. These were my rules. At the time of the breakdown, these were my rules, 100%. But you know what else was my rule before I saw this distribution top? Before I saw this, let me take you on a journey. Back when we were in here, you know what my rule was? I'm not selling a damn thing until December 2021 because all cycles end in December. Every one of them. And I'm smart and I'm telling you that's where it's going to end. And then what did we know? We came nose to nose with Wyckoff distribution and the plan had to change. The same thing is happening here. We did not make it up into the distribution trade range, building support, consolidating, building support, riding the moving averages. Like, we didn't do that. It just went up only. There is no support. If the price starts to give out, there's no support here. So I know this was the plan. I get it. I'm the one who wrote the rules. I know. Okay, they were my rules. I get it. But the rules are on hold right now because I cannot ignore this. I can't ignore it. I can't ignore it. Especially on the heels of, oh, I don't know, other top signals like NFTs going 1,000,000% in a day. People buying pet rocks for $5 million and it's making the headlines. CNN is interviewing crypto exchanges and talking about pet rocks. There are so many top signals and things that aren't making sense that when I see something like this, that at least starts to shed light on what might happen, what might be happening. Let me put it to you just a slightly different way. This range was plunge protection. Okay, this was big boy saying, they got me, but I've got more money, so I can shove it up at least for this. I can at least shove it up. I got this. Then I can exit where I feel comfortable. Then I can sell my bags. Then I can get out of my alts. Then I can push my alt to its all-time high. Then I can get out of my NFTs. Because we do not have, and again, I can be completely proven wrong. I've already told you my validation is 51,000. This is the first time I've seen a 2-month accumulation period and everyone just gets like rock hard thinking that we're going to go to the moon. I've never seen sentiment so high in 30 days to go from we're going to die Goblin Town to new highs, we're going. If everyone in the world is bullish, this is not a bad time for something horrible to happen because it makes so much sense. Get everyone excited, sell your bags to John Q. Public. There's so much ego stroking between retail on crypto Twitter or crypto Facebook or whatever, and the billionaires who literally run exchanges and trade against you, or they're just a hedge fund and they trade against you. SBF said, you know, he's going to buy any Ethereum below 4,500 or whatever, and then he dumped on you. He dumped on every one of you. He went on a podcast and he talked about it right here. And then next thing you know, this happened. Okay. I don't get the infatuation between retail and these whales because you are on the other side of the trade. Hi, surprise. Good morning. You're the guy they're selling to. So of course they want you excited. Of course they want you bullish. That's markets 101. Like, you got to understand this. Speaking of Ethereum, what was up only is now sideways only with a failed breakout. By the way, does this look familiar in any way? We have a trade range formed, a breakout, another breakout with some consolidation above the trade range, and now we're broken back into the trade range. Boy, that looks awful familiar. That looks awful familiar. I wanted to lay this at your feet. You can take it, crumble it up, throw it away. That's completely fine. I probably would too if I was in a long or in a position or whatever. But this was too important not to share. Fear and Greed is 79. NFTs are selling for 5 million. And now we have the downside is its low time frame, but there's a justification for a distribution top being formed, not just on Bitcoin, but also on Ethereum. So I don't know how you can just say like, I'm like twisting the facts in some way. And by the way, Glassnode says no whales have re-entered their positions. All I want to do is understand this market. I want to understand why things are doing what they're doing. Full stop. If you think that means I'm being bearish, then so be it. And it is what it is. Again, either these kind of whale wallets, either this information is completely useless and it doesn't matter, or you need to factor this into your trade strategy, because a lot of people do. The Willy Woos and all the guys they follow. All right, so let's look at 10K wallets. There's one new 10K wallet, but I would not call this a trend by any stretch. Let's look at the 1K wallets. Down, we have a new low. With these two pieces of data together, you could argue that maybe a 1K wallet turned into a 10, or multiple consolidated into one of the 10K wallet. I don't know, who knows? So call it a push, call it sideways. Not even bearish, but just sideways. Our 100 Bitcoin wallets, we have about 20 new ones, but not substantially different. 10 wallets are sideways. 1 wallets are up through this entire uptrend. They've done nothing but grow. Now we get to the retail. 0.1 Bitcoin wallets, or retail wallets, going to the moon. And 0.01 going to the moon. You either believe on-chain metrics or you don't. It's almost like I'm not crazy. Multiple people across multiple spaces are starting to like pick up on things. All right. Permable Will is starting to say, whoa, hold up. The guy who told you to buy 20K or 30K. Bollinger, who told you to buy 30K, is telling you to short, for God's sake. Like, wake up, slap, slap, slap. Don't just say that I'm being bearish and ignore what I'm saying. Absorb what I'm saying. And then if you can find a logical argument to ignore it, then that's fine. Then do that. Come up with your own strategy, do your own research. I get it. But don't just like blindly say that I'm being stupid when multiple people through their multiple avenues of trading are coming to the same conclusion, all different ways. But I bet I'm the first one to talk about 2 nested Wyckoff distribution ranges in the same cycle, because I ain't never seen that shit. That's crazy. If we do break into the trade range again, what I would expect to see is at least a visit to the other side of the trade range before something happens. Something like that. Should this play out in a bearish manner? The reason I'm coming up with that is because if we go back, you can see that we did something very similar where there was a point in this trade range at the top where price rallied, broke, and then consolidated below before it full sent it again. Right? So I'm not saying we're not going to rally to whatever the trade range highs are. What I'm saying is it's time to start looking for the exit. All right? You just noticed that your movie theater caught on fire. You need to know where the exits are. Maybe the guy comes in and with the fire extinguisher and he puts the fire out. Maybe. All right, maybe he does. but maybe he doesn't. And you need to know that this is a dangerous place right here. This point in time right now is dangerous, and you have to accept that. The other thing that I don't think I've really made clear, if this right here is distribution, okay, what that means is that the plunge protection team is out. The guys who made this range are gone. This was the start of the run. This was the end of the run. Just by that same logic, that is the start of run. This is the potential end of the run. Like that is what should be your takeaway. To prove my unbiasedness, here's something else to tell you guys. I have never seen in any schematic price actually get back below any time frame Wyckoff low. I've never seen it. So does this mean that this is going to be some kind of bottom? Like we print some kind of double bottom? I don't know. I can't see the future. I cannot project what this is going to go on to be. Will this be another first? This market has been full of firsts. Are we going to do something where we actually make a new low and then like send it? I have no idea. I can't tell you the level to like with certainty buy. If it does break down, you're like, if this should play out. I don't have a price target. I don't. We have a 90-day distribution range and then a 4-day. Which one's more important? The more recent one or the larger one? I don't know. I have no clue. And I'm not about to like act like I have all the answers, especially when it comes to that. All I'm saying is this is dangerous. I've identified it as being dangerous. Other people are starting to pipe up too. You should probably take it serious. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.